All right, Bulls and Bears, how are you doing? Hope everyone is well. Back with another dose, economic reality, bull to the bus, BX4 news. Let's go ahead and get right into it. We've got a lot of news to get caught up on. I apologize, I did not get a video out yesterday, but a lot of news to get caught up on. The markets mixed today. On the week, though, the Dow Jones had a 7-day losing streak, a little bit more than a week. So we're starting to see some cracks in the foundation. Can they pump this thing up with endless money? Absolutely. It doesn't have to come down anymore. It can go up again, even with World War III on the doorstep, even with record levels of debt, even with all-time worst affordability for homes. We're going to talk about the housing market here in a little bit, but a few other things to get caught up on. First, government spending breaking records, folks. Let's go ahead and bring up some information here. And this is how they keep it going, even with consumers loaded up on max levels of debt. Most people in their eyeballs with debt. This is one of the ways they can keep this up, folks. Government spending. And look at the deficit here. Look at this chart. And tell me what you think this looks like to you. This looks like desperation to me. This goes all the way back to 2010. U.S. budget deficit. Make it larger here. Look at this. Beginning of the fiscal year. A record breaker, folks. And not just by a little, by a lot. And so, of course, and there's people out there that think this is all going to be fixed in less than 2 months, that it's all going to be fixed, folks. They're going to cut some agencies and cut spending, cut through the red tape, deregulation, and that's going to fix everything, folks. This cannot be fixed. With what they're talking about, cannot be fixed, folks. And you're going to most people will be disappointed. And then 4 more years, they'll change it back to the other side, and they'll see that nothing actually fixes this because no one is talking about fixing the underlying problem. And it's amazing that people really expected the cost of living to get better, to come down. And if we go over to look at the latest producer price index, you can see a nice visual on what is actually happening here. Producer price index, we're now up 3% again year over year. And let me move myself out of the way so you could see it here. Re-accelerating inflation, folks, and of course it is a lot higher than this, but looking at this going back, you could see the trend has drastically changed. We had that peak in 2022, came down, now we're going back up again, folks, because more money, just like the deficits are exploding. Cost of living is not going to come down for the most part. You're going to see some corrections here and there, but overall it's going to be higher. Let's go into the housing market, folks. Some pretty nice price corrections, but even with the corrections, housing is still madness, bonkers, insane, whatever way you want to put it. Let's look at this here out of Bend, Oregon. Let's see here out of Central Oregon Daily. Bend median home prices plummet to $100,000. You would say, wow, time to buy, right? $100,000. Not so fast. Look at this. $100,000. The new median price is $700,000. For Bend, Oregon. Nothing against Bend, Oregon. I'm sure it's a fine city. I think I went there years ago. Too young to remember, but $700,000? This is the kind of prices that people used to pay in California. And not out in the desert in California, like in San Diego and other areas. In fact, the median home price in San Diego dropped close to $350,000, I believe, after the busting of the housing bubble. $700,000, folks. That's the lowest since January 2024. Insane, folks. After a drop of $100,000, you're still paying $700,000 for median price. In Bend, Oregon, what's going on in Bend? If you know about Bend, Oregon, please let me know. Is it worth $700,000? And that's the median. You're lucky to get a home at the median price. Other reports here, other news on the housing market. Wolf Street. Headline, most splendid housing bubbles in America. Prices drop in all 33 big metros. The most in Austin, Tampa, Dallas, and San Antonio. What have we said here? The 2 biggest bubbles recently in the past few years, they went up the most. Texas and Florida. We've got Austin down 22%. San Francisco down 10%. Phoenix down 9%. San Antonio down 8%. Denver down 7%. Salt Lake City, 6%. Sacramento down 6%. Portland down 6%. Dallas down 6%. Seattle down 5%. Honolulu down 5%. Now, why do some of these price drops seem really big? Like 22%, that's pretty big, right? That erases like a 40% gain because on the way down, you only have to lose half as much to erase the gain. So here's Austin, Texas. Here, look at this, folks. This chart is pretty revealing. We see from the peak, that's the 22%. Year over year, because prices bounced up again, it's not as significant. But year over from the peak, very, very nice. Here, let's look at a couple more here. San Francisco from the peak, right there, late 2022 looks like. Again, Wolf Street, if you want to check it out. Phoenix from the peak. What was up with the spike in at the end of 2021, early 2022? We see that pretty much across the board. Well, lower interest rates, lower mortgage rates. Denver, you get the idea. We see definitely not a elevator going down. Not even a stair climber going down. In fact, we're on an uptrend again in Denver and many other cities. So pretty interesting what they're doing, what they're throwing at the housing bubble to keep this bubble from popping. But yet we're told we need more rate cuts. We got the central bank out there talking about possible rate cut coming up next week. We're going to hear it from the central bankers again. Now, when you have spending capabilities that are literally unlimited and open-ended credit card here in the United States, that means endless debt can be created for projects such as this. This is over in, where's this at here? This is an underground, not just underground, an undersea tunnel that they're going to be building. This is Norway. Look at this and let me know if you would want to drive undersea in this tunnel. Of course, this is a digital preview of what it'll look like. Under the sea tunnel. Here we go. It's going to open up. We're going into the tunnel. Look at that. There's no way. I would not do this. Too much weight. Too much weight of the sea above, and I would be afraid of a collapse. Let's look at it one more time here. Under the sea. Here's the one lane. There's another lane over there. Another tunnel. No thanks. Would you want to drive through that? Maybe you're braver than me. Or maybe I'm just phobic of something like that. Now, some people would argue that maybe we need more things like that in the United States. At least we'd be putting the money to work instead of just sending it all over the world for bombs. Especially in LA, Los Angeles. The traffic there. I lived in LA for a couple of years. I would not want to live there again. Now, just to side note real quick here before we continue in the news. Things were kind of getting tight around my house around the holiday season, and some medical expenses came up for some family members. And then all of a sudden, XRP, the crypto, exploded like sixfold. And you remember I told you back in the 30-cent range, that was one of my things I was buying. I was accumulating a lot of that. So huge win there, and I've been kind of celebrating with my family here on that one. But look what's happening across America here. I don't know how people are getting by without investing. Look at this. Many Americans struggle to keep the lights turned on as energy costs and usage rise. It's out of CBS. Struggle to keep the lights on. How many is many? With the cost of things like food, housing still straining people's budgets, many households over the past year have found themselves having to pare their spending on basic necessities. Look at this, folks. This should tell you what's going on. The study found that more than 34% of respondents said they had to cut back or skip spending on certain necessary expenses at least once over the past year in order to pay their energy bill. It's more than 1 in 3 folks. So if you're someone living paycheck to paycheck, if you're one of the 70%, you are not alone. So like I said, I would probably be in the same boat if it weren't for investing. I've got kids here in California, family, and it's not easy. It's expensive, but investing is keeping my head above water for now. Not that it's going to be like that forever. I hope so. We'll see what happens here with a lot of changes coming up in January. Kind of excited. I'm kind of cautious. I'm kind of skeptical. I'm not as euphoric as a lot of the people thinking there's going to be some big miracle and some big miraculous turnaround here. And in fact, I think things are going to get worse. But I hope I'm wrong. We're not wrong very often, but I hope I'm wrong this time. I hope things get better. But as the report shows, prices are ticking back up. Inflation's reaccelerating. And what are they going to do? Cut rates and do more down payment assistance programs. Maybe more stimulus checks. As soon as the next crisis hits, it's going to be more stimulus checks. They're going to freeze everything so people can't get foreclosed. They won't lose their cars. They can't get evicted. They'll start doing helicopter money again to businesses and to people. Trillions of dollars, folks. It's unlimited. It's open-ended. So where does it end? That's the thing, right? So we're going to see what happens, folks. Black swan alert, though. Be careful out there. Going to wrap it up. We'll see you this weekend. Please make sure you are subscribed because we got some very big news coming out on Saturday and Sunday this weekend here. We'll see you very soon. Keep stacking. Bye for now. Peace.